Hello again, everyone. Welcome back. This is the technical analysis of the stock market video, Saturday, June 18th. We're going to start off and take a look at the ETF dashboard. I titled this video Capitulation ? Because we're starting to get there. I just don't think we're there yet. Everyone's looking for that bottom. And honestly, the bottom that I'm talking about, the bottom that I'm looking for is an intermediate level bottom. It's not the end of the bear market. Okay, so I don't think we're there yet on even an intermediate bottom. So let's dive in and take a look at this. Look at the week that just happened. 0 sectors up, 16 down, the same as last week. But the degree of movement in here was a lot worse, of course, led to the downside by energy at minus 17%. But I don't think I've ever seen this before. I've never seen 0 sectors up. Now, maybe there have been. But man, that's pretty negative picture in here. And when you look at the year to date over here, energy's still positive, but it's the only one. And the home builders are leading at minus 39 to the downside. There are 5 out of 16 sectors that are 30% or greater negative for the year since January 1, whereas, like the Nasdaq Composite peaked out in November. So here's the index ETFs. The Russell 2000 down 7.5% for the week, and the Nasdaq 100 continues to lead to the downside, down 31% for the year so far. So very, very negative picture. I want to take a look at, let me shrink this back down. I want to take a look at this side-by-side view. Here's the Dow, the S&P, and the Nasdaq Composite. So the Dow was down 1504 for the week. The S&P down 226 and the Nasdaq Composite down 542. Now, it looks to me like the Dow and the S&P are playing catch up in terms of the kind of strong movements that we're having in here versus the Nasdaq Composite. Because just look at the breadth of this, the range of this last bar, this last week. The range in here was 679 from high to low. The range the previous week, 917. We're getting big, strong ranges. Now, this was less than the previous week also, and so was this one, but not nearly as dramatic, in my opinion, as what we're seeing here on the Nasdaq Composite. So we'll take a look. I'm actually watching for some very short-term turns to the upside, but do I think that that's the bottom? No, and not in terms of an intermediate bottom. And I'll tell you why here in a second, but let's go back to the home screen. Let's drill it down at the Nasdaq Composite. We'll look at the Qs also, but it's the same kind of picture when we look at the Elliott wave picture. Now, the Nasdaq Composite was up, I think it was 152 points on Friday. So it was up 2 out of the last 5 days here. Okay, so 2 out of the last 5. But when we go over and take a look at the Elliott wave picture, I am still looking at this as trending down. I still think that we are in a third minor wave down, and whether it's minor, whether it's intermediate, doesn't really matter to me at this point in time. Depending on if the waves become pretty good size, very big, then I may change this to intermediate level. But for our intents and purposes of identifying the wave structure, it doesn't really matter. So within the third minor wave, I think we're in the third minute wave. And within the third minute wave, I think we're trying to flesh out a second wave higher. And here's why I'm thinking that. Because when I look at the hourly view, and this is what I call the hourly view, which is my 65-minute view, it gives me 6 clean bars for the day. Okay, 6 evenly spaced bars for the day. So I look at and I see a 3-wave move up, I see a 3-wave move down, and now we're working our way back down. This looks like a potential flat to me. So that would imply that I'm looking for a 5-wave move up here to finish off this C. Where could this end? It may end at the end of A, which is up here at 11,244. Here's a couple other targets. It could just close the gap right here, which the low on this day was 11,339. So we're in this area. Back up here around 11,266. So watching to see the wave structure and see if we even get that far in terms of the pullback. We got very good bullish divergence short term on this move down. Now, the caveat where this scenario goes out the window is if we continue to push south on Tuesday and next week, and we take out this low and continue to flesh out a 5-wave move, then that just, there's no other choice but to say, okay, well then this wave 2 really ended here, and it was a very abbreviated wave 2. Okay, and I'm talking a 1, 2, and that we'd be in the third of a third of a third. And when this ends, which I don't think it's going to be very, maybe it's a couple of days worth of price action in here, and then we roll over, I'm expecting it to be pretty strong to the downside. And when we look at the Qs, it is the same kind of picture when we look at the Qs. Seems like there was something else. No, I'm not missing it. I remembered it. So same picture. Here's the Qs. And then we look over here at the 65-minute chart. It's the same kind of thing that I'm seeing in terms of the indicators and the price action in here. 3-wave, watching for a 5-wave. So that is the picture I've got on the Nasdaq Composite right now. Let's take a look at a couple of our indicators. And I want to start off here with the Mcclellan Oscillator. Now, here's where the numbers are that input into the Mcclellan Oscillator. We're sitting at a minus 169. I'll show you where that is graphically in a minute. But the thing that got my attention, look at this, 5% and 10%. Okay, so what these numbers are that I color code in here like a little dashboard, it's the percent, the percent up stocks as a percent of the total of up and down. Okay, so right now on Thursday, there was only 10% up, which implies a 90% down day. But back over here on the 13th, we had a 95% down day. 2 out of the last 5 days were 90% down or greater. We hadn't seen that the entire time from January 1 down, since January 1, since this whole bear market started. This is the first time we're seeing this kind of extreme type of price action, okay? But we're also seeing it, so this is on the New York Stock Exchange, but we're also seeing it within the S&P 500. Jason Gufford tweeted this on Thursday after the market closed. More than 90% of the stocks in the S&P 500 declined, 5th time in the last 7 days. They'd never seen this before, okay? Never seen it before. Now, let's take a look at the Mcclellan Oscillator and look at graphically where are we sitting. Let me scroll over. We're down here at extremely oversold. Okay, so we're bouncing around below minus 150 is in the extremely oversold territory, just like we bounced around back up here at the end of May in extremely overbought territory. We're now doing the exact opposite. Now, when I look at the summation index, which is a cumulative of the oscillator, we're still downtrending. Okay, lower highs all along, lower lows, and now we've turned back south after pulling back up into kind of a neutral area, and we've turned back south again. So that is the picture that we've got coming out of the Mcclellan Oscillator and the breadth of the market. The other thing I wanted to show you in terms of talking about the market, there was a lot of data that was released this last week. And of course, everybody's talking about the inflation. And of course, we had the Fed meeting, etc. But look at this Philly Fed number. They got information out of the Philly Fed this last week on Friday, actually. Look at this. Expected new orders. This number is below anything that happened 2007, 2008. Talk about U.S. manufacturing in trouble. That would kind of imply that the economy isn't in trouble. And of course, when you see the kind of thing that the market's doing, that's exactly what's happening. Okay, so I wanted to mention that. Let's take a look at the VIX. Look at a couple of another one of our indicators here. Let's take a look at the VIX. Okay, so the VIX was down 182, sitting at 3113 on Friday. So a little bit of a pullback. We're kind of stair-stepping our way higher. And this long-term trend line is something I noticed on the weekly view. And then let me see if I can pull this up. This is what I've noticed in here. It looks like a rounding bottom. And if we break above that longer term trend line, I think we're going to get a big spike move to the upside. So we're definitely watching that. We could very well chop around for a few days in here, chop around while we're fleshing out that wave 2 I just talked about on the Nasdaq and the others. And then after the wave 2 is complete, we get the burst to the high side as we're doing a wave 3 of a wave 3 within a wave 3. All right, so that's in on the indicators. Let's go back and take a look at XLE. Now, I talked about this again, minus 17% for this last week. On June 4th, I talked about in the video on XLE, I talked about how I felt like we were getting ready to pause. I thought that it was getting a little bit, just the way the price action was. I saw this candle for the week. This is the week of May 29th. And so this one right here, this is the week of June 5th. So when I did the June 4th video, we didn't see these last 2 bars. It was just this bar right here as the high. And it just looked to me like maybe we're getting a little extended, about ready for a pause. It looked like a potential reversal type setup. We didn't really get a reversal bar until the very next week. And then we came down hard this last week. The indicators were negative, volume was dropping off. So that is the picture there. We've definitely come down hard. I think if I had to look and say, well, where could some support come in? Down here around 71 to 71. Let me zoom in. It seems like I'm getting a couple, 71. Go to the daily. 70.44 to 71, so 70.5 to 71 in this area. We closed below that, then I think we're going to flush down, to, maybe another 5 points or so. Now, one of the oil stocks that I watched was very, very weak with all of this, and this was Chevron, okay, CVX. What I didn't like about Chevron was the way this, we looked like we had a corrective move right in here. And then what was happening in terms of the rally coming off this April 25th low, it was just doing nothing but overlapping, okay? Just completely overlapping. This almost looks like some kind of an A, 3-wave A, B, and doing a C wave coming down, and we're coming down pretty doggone hard. We've closed below the April low. I would say we're not going to get support until we get down here into the 135 area, plus or minus a couple of points, down into this congestion. I'm picking 135 because if you look at the close of this day, it pretty much puts it right smack in the middle of this congestion. So we'll see. We've gotten extended. You don't go down every day necessarily. Sometimes you do, but that would be a target, since we've already broken below that April low. So we continue to push down over the next week or so, I would say, week or two, I would say that would be a target down in here, 135. Okay, that's it for this video. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. Happy Father's Day to all the fathers out there. And again, the market's closed on Monday, so I know you're depressed like I am. The market's not open on Monday. But have a great day and a great week anyway.